following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a gorgeous day at the headquarters of Technical Trading and Investing. It is TFNN.com from the world headquarters in Clearwater, Florida, where we're getting ready for the Daytona 500 here coming up this weekend in Florida. So we're going to have a great time down here. Always a good time to be in Florida in February when it is inclement up north. I know some people are getting some snow, especially Chicago today. Of course, going to be cold weather there for another month or so. It's 8 weeks. Always a good time to get out. What I don't understand is one of my good friends, my racing buddy and racing partner, and his wife decided to head out to Hawaii. If you live in Florida, is there really that much difference in going to Hawaii? I guess, you go to Maui or something, and maybe it's like a little tropical island, but I don't know. Is it really that much difference? The weather a little less humid, but I don't know. I think maybe I'd go somewhere like skiing or something if I lived in Florida and wanted a vacation somewhere. A little different. Anyway, I'm watching his two dogs, and kind of interesting, kind of an older one. He's a little different. He's kind of old and crotchety, but he is a male dog, but can no longer raise his leg. So instead of finding the local tree, I've never seen a dog do this. If you know what a wheelie is on a motorcycle, where you get on your back wheel, if you stop real quick, you can take the back tire off and basically be standing on the front wheel. Those are called stoppies in motorcycles. Well, this little guy, he does a stoppie. He kind of does a handstand, and when he goes, I've never seen that before. Kind of interesting. So anyway, my puppy and the other puppy running around chasing each other, wrestling each other. So he's going to come pick him up tonight. So I'll be back to just a one-dog household tonight. But it's been an interesting week as I've had walking 3 dogs. Everybody thinks I'm a dog walker around the neighborhood now. Used to seeing me with one dog. But I don't know. The whole standing on your hands to go pee thing, that's a little different. So anyway, well, we're going to look at it. Anyway, we got a market up slightly today, up 9 points, up 0.6%. Everybody's saying, well, the pullback is over. The pullback is over, and the answer is 2.2 billion shares so far. We had 4.7 billion shares yesterday, almost 4.8. We're going to come in with about 3.3 unless some kind of major market action is changed before the end of the day. So far, we have a very low volume, and I mean very low volume pop. If you remember yesterday's show, we were talking about 2.9 billion shares when we started the show. 2.2 just doesn't cut it. Again, a lot of people probably getting out of their short positions because any short win, being short here lately, has been wonderful. But I suspect that we continue to see stocks that are lower in this marketplace, and probably not a bad time to be looking at it. We also continue to see everybody just go vicious against any kind of move in the VIX. It's off about 5% today, 1439, but it'll continue to move. I think we've gotten a very good signal that the volatility has, at least for some time, made a low, and we're going to continue watching this marketplace. But to me, I'm looking at a market. There's an old saying, put it in the newsletter this morning. I think the guy's name is Schopenhauer. But basically, he said all truths go through 3 stages. One, it's vehemently laughed at. Number 2, it's vigorously defended, and in step 3, it's accepted as being truthful. So basically, everybody laughs at you, and we're in I think the second period here, where everybody vigorously defends their position. It's not so much laughable anymore. And the third position is, yeah, we all knew it was going down. The hindsight bias there. I knew it all along. And I think that there's some very good calls out there, and technical trading tools that do say it's over. I watch the summation index, the McClellan summation index, and for longer term, it's pretty good. But we've been going down now for, I don't know, a week or so, and I continue to see stocks that are rolling over. We're going to go through the movers today fairly quickly, but not a lot and light volume so far. I'm short a couple of positions, and for the most part, they don't look like they've bottomed to me. In fact, some of them are even down a little bit more today. Some are popping up on just very, very light volume. I'm more than willing to hold these positions for a while. We were short gold. We talked about that during the week. Gold is really not doing a whole lot out here. If we just look at the GLD, it's off like 0.2%. Do I have a... yeah, I do. Let's see what the physical contract looks like here today. And that is, where's that at? $4. Not bad, but of course, no rally into the weekend, which is really going to bug a lot of gold bulls out there at 1574.10. And when we look at silver, it's off 17 cents, 28 and 53. I think it's going much lower. I think we could rise over the next few days and get a nice ABC setting up for this to go down. We have one huge day of volume. It is kind of a Goldilocks and the three bears when you get volume. If it's too light, then it's not enough, and you go ahead and bounce. If it's a good moderate volume, then you probably continue on the path. If it's huge volume, it comes in all at once, then normally that's an exhaustion move. Doesn't mean it's done going down. It just means it's done going down for a while, and why I covered my gold trade. I kind of saw that coming in. I suspect I'm going to get another shot out of it. I'd love to see gold back above 1,600 to get the next short in. And at the meantime, it's probably just not worth holding options on gold, because it's probably going to bore everybody for a few days out here. We'll see what it does then. Other things moving in the marketplace, the dollar index is about flat, so everybody was looking for this thing probably to rocket up to $84, and that it's flat today is another for those Pavlov dog traders, which is as soon as the market goes down 10 S&P points, you've got to go in there and buy with everything you have left. These guys weren't buying when it was April of 2009, but they have to buy here at the top and make a stand. The problem is, and I put it in my both newsletters today, what happens when you get to the top? It becomes incredibly hard to move a market very much higher, especially when the volume is falling off. It is basically linear on the way up. In how much money it takes to move a stock another 10% higher. And I think we're at that point now where we are probably at highs that are going to be extremely difficult to go any higher. As long as that summation index is headed lower, I will be holding my shorts. And not the ones that I'm wearing, the shorts in the market. So anyway, you can give me a call at 877-927-6648. That's 877-927-6648. And I've got a peeping Tom in the engineering booth here who wanted to see, I guess, if I was actually wearing any pants at all. Most people don't know when I come in here in shorts every day, and you cannot see. It's always like those judges. You always wonder whether they got any pants under those robes. I figure that most of them don't wear pants under the robe. That's just me. I think they're kind of like sticking it to the man by not wearing pants. If I was a judge, I would. Anyway, when we start looking at these stocks real quick, we're going to go to the charts here. We're looking at AF, which is a Crombie and Fitch. This thing got awful close to its previous high. Got into the candles of March 14th, where you had a 5.1 million share actual high in 2012. Here we are almost a year later. He got into it February 20th with 2.7 million shares. Kind of rolled over the next couple of days. Volume is picking up on this. I suspect what we had was a higher volume low, and that higher volume low came in on August 3rd this year and has not been tested with lighter volume. Kind of got close on October 26th, but your chances are still probably about 80% that you're still going to see that August 3rd $28.64 low retested. Today it is starting to roll over. I suspect the first move is going to be back to this massive gap up that happened on the 14th of November last year. Huge volume, and that's going to be support for a while around the $40 range. We've got Aruba Networks, and on this, is that today? Oh, yeah, let me get, take a look here. Program options, server 1, server 2. Taking a look. And that's gapped up fairly strongly out here today. And what can we see on that? And that is a spike higher. It has jumped what is known as the creek. It is broken through ice, all those paradigms. What you want to see is this thing hold above 25.55. Everything that we've seen lately has broken above previous highs, coming back and come back right back into the trading range. So right now, what do we have? 28. That can't be right. Let me zoom in here. 25.62. So yeah, we're just above that. Well, we're going to have to really see how this closes. Let's see if I have a just about 10 cents above. Is that right? Oh, I'm looking at Aruba. Excuse me. I was looking at Crombie and Fitch and wondering why my numbers didn't match up. 25.15, 25.62. So you want this thing's only about 7 cents higher than its breakout point that had 3.4 million shares. If you can't hold that with 16 million shares, maybe shows you that there are some bigger problems out here in the marketplace. AVG Technologies today. And let's take a look back here. Nice bounce up here. This did exactly what it was supposed to. I think we talked about this on the show as it came back into these gaps. And this is pretty much exactly the pattern that most people are looking for. You take off with a sign of strength. In this case, on the 28th of November, it went up with 1.3 million shares. It came back, tested that gap up on February 5th. With 480,000 shares, so basically, what, 35%? It kind of meandered around here for a few days, and then popped out of here with huge volume, nice price spread, and of course now it's left yet another gap that might come back out here and get tested, but not bad for AVG. We'll be back in a minute. Again, you can give me the call at 877-927-6648. That's 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, not a lot of volume in this market. In fact, really slowed down over the last 20 minutes. 2.35 billion shares so far. 15.11 on the S&P cash. Any close below 15.18 still leaves the top end. Any close below 15.08 would be a decidedly bearish signal, at least for me, and is just a bounce and a down move. So we'll continue looking at that. We do have a call today, and it's Roger from Mount Vernon. How you doing today, Roger?
Hey, pretty good, Dave. I'll tell you what, if you were up here, you'd have pants on.
Yeah, I bet I would. I heard that it was cold up there.
Yeah, it's really windy, too, which puts a pitch on it, you know?
Yeah, we had that last week. It was blowing 40 mile an hour, and the waves were up. And finally, over the weekend, weather kind of changed, and it's been nice down here. And I continue to be able to tell everybody on the phone, excuse me, I got to turn my air conditioner off so I can hear you.
Hey,
I love to do that to Northerners and torch storms. So what do you want to talk about today?
Well, I wanted to look at two of them. Fossil, I got a short position on there. Wondering what you were thinking about holding on to that short position, or...
I don't have any problem with it. Fair disclosure, I am short and have puts on it. I do not have the equity, but I think you're just fine. You had an island reversal. In fact, Steve Rhodes and I talked about it this week about using that for one of his examples for Wednesday night. So, I think there's not a better looking stock out there to be short. This is just a market where everybody's hanging on. We have a doji today, which is probably going to be either the halfway move down or we're going to see a bounce out of it on Monday, and then we'll know. But my guess is it's a halfway move down, and it's headed for $90.
Really? Wow. Well, that's good. That's the good news. The bad news is it's sitting right on. It can't seem to break that 50-day moving average. I know what you think of moving averages.
And what do you think I think of moving averages?
Well, just erase them.
That's true, but that's through huge amounts of study and testing. There is a slight blip right at 50 and 200 days, and that is almost a self-fulfilling prophecy. If enough people actually believe it, then it would matter. Yeah. When you really go back and test it, what you see is like no blip at 49 and a blip at 50, and then right back down at 51. If in my opinion, if it really was indicative, then probably somewhere around 40 days, you'd start seeing a nice slope and peak up to 50, and then maybe down. But I mean, you literally just see one little pop at 50, and that's it. So to me, it is maybe a self-fulfilling prophecy. But maybe something that doesn't work organically. But if you get enough people to believe anything, then maybe it works, right?
Yeah, well, it is showing that little blip, at the 50.
Yeah. So,
I think it's
to me,
around 101 and, 50 is 99.90, so.
Yeah, to me, it did everything it was supposed to. It went right into the gap. This thing came down on monstrous volume. We've never seen anything like it. It's headed down right now, I think, to the next, what do I want to call it, congestion area at 90. And that'll probably bounce between there at 90 and 100 for a while, and eventually it's going to break through and get back into that gap from all the way from 70 to 80. I just can't see anything this bad. In fact, I look every day, and I just can't see anybody wearing watches anymore.
I wear a watch.
Everybody, let me put it this way.
Yeah,
most of the people I see do not have watches. And it's, if you have one built into your phone, you carry your phone with you, you really need to watch anymore. And they're a watch company. And they're not really like a flash watch like Rolex. So to me, it just seems like kind of a oversupplied business with too many customers. But that's just me. Their chart certainly looks ugly. So. Yeah, it's probably one of the ugliest charts we could find. In fact, Steve Rhodes and I talked about it for about 5 minutes, I think on Tuesday, maybe Wednesday, right before. Yeah, I think it was Tuesday because we were talking about what he was looking for an island reversal for his webinar on Wednesday night, and I brought it up. He goes, "Ooh, yeah, I forgot to write that down." So we both kind of went over it together, and at least two of us at TFNN agree. So, to me, at least the minimum we should look at for this is a test of the low on 5th of February, and that is 95.44. And I think that's at least a bad tick out there. You had one more you wanted to look at. Do you want to hold through the break?
Sure.
Okay. We'll go through the break and come back and look at Amazon with Roger in Mount Vernon. I take it that's Mount Vernon, Virginia or somewhere up there. Anyway, we'll be back in a minute.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're back with Roger from Mount Vernon in Washington State, not in Washington. In what is it, West Virginia? Where is the actual Mount Vernon? I've been there and I can't remember.
I think it's Virginia. You mean George Washington's hangout?
Yeah. His crib, as they would say today.
Yeah. Yeah, with his hemp garden and his whiskey machine.
Yeah. So we wanted to talk about Amazon. Amazon down a little bit today, but maybe not such a big deal.
Was it a short, you think?
I tell you what, the problem is who's going to be. It's one of those games where you have to pull out each little log and continue building something higher out here. It is a screaming short. The problem is, when is everybody going to identify that this is a house of cards? Depending on which numbers you use, this thing's got a PE of 250 or 500 to 1.
Wow.
And they say, well, we just keep putting the money back into the business every year, and that way we don't have to pay taxes on it. And if we just quit building out, we'd make money. Well, we've seen the biggest business out there, which is online shopping, get taxed. When you look at there's several articles if you Google for Amazon's tax revenues that were supposed to be so huge that we're going to float these states that had budget problems. They were predicting they'd get in the first couple of months they get $1.5 billion, and they've gotten like $150 million or something. So it's I'm wondering just how much collecting taxes has nipped at the bud of their online selling business. If it's just as cheap to get it at Walmart, why don't you get it when you're there? When you figure out that you got to pay taxes and shipping. So the whole question is the preposition of Amazon that it's easy to use, or that it was less cost? And I think it was both of those. Now you've taken away one leg of their stool, and it's a little bit rocky. The other thing is that a lot of their business has been, or other businesses, is being gone after by IBM and some of the others, and especially and Microsoft in the cloud business. And in fact, I noticed that Amazon sent me a notice that I could get cloud services using Microsoft tools and servers and stuff, which is the first time. Mostly they've been stuck with basically Linux-based server services and stuff. So maybe that's a capitulation to Microsoft and then coming into the business. But I don't know. Every business that they're in has huge problems. They've got super tight, low margins, and everybody's been able to give them a pass for 10 years on not making any money. The question is, when does the house of cards fall? Every time I do any kind of value on this stock, it's $50. So, yeah, I mean, it's horribly, horribly overpriced. So, when is this thing going to fail? When the people that own 90% of it, which are all the institutional people, decide to go ahead and start selling it. And we're going to have to look at something. Unfortunately, Apple, we really didn't get a good double top or anything, and we really didn't get a great double top in this. The only thing that would tell me that you could pull the trigger would be yet another test at 284 with a lighter volume. And unfortunately, I want to be buying puts here on it right now, but they could run it up again. When you don't have to make actual money to continue to run this thing up, it becomes somewhat problematic on when you can get people to sell it.
I see.
But well, I think the only technical item I have in here is the test of 284. Lighter volume would be a triple top, and I think you could take a shot there. But horribly overpriced, does not make money, and everybody's going after every single business that Amazon's in. So I don't think you could find a stock like that. It has been weak on this last leg up to that 284. So probably the worst is going to be in consolidation out of here, but I'd love to see one more test of the top.
Well, do you think it would, if the market peels off a little bit, you think it would also? I
think this thing's got 180 on it in this year. Because when this thing falls, it's not going to just kind of pull back. This thing's going to fall like a souffle. Because everybody is, and when you look through the filings, everybody's in it up to their necks, just like Apple was. So the question is, if I was going to buy puts, I'd be buying puts for as long as I could out. Because when this thing falls, you don't know when it's going to be, but it's going to probably be huge and be tough to come in after that first huge move down. Okay?
So you don't recommend putting a short position on waiting?
You got a 13 million share high. It didn't hold it, so you got kind of a blow-off top in that. But I'd certainly like this thing to at least get back up to 275 to 285 to short it. Okay. You know, if you got some real weak, like next week, the market starts moving down and they move this thing back up, because they do move it up and down markets. The guys will come in and defend the stock vigorously. I was short it, so I know. And it was, it is every day that it's down in the market, they come in and start trying to push it up. And eventually that's going to end. Someone's going to say, hey, it's time to get out. And everybody in this is a whale. So when they start getting out, they're all going to have to get out. And it's going to be probably brutal, just like Apple was.
I see.
Okay. So I just watch it close. If we start seeing huge volume on the way down, it's already started. Maybe we can chase the thing. But it's going to be very hard to short.
Okay.
Okay.
All right.
Thank you very much. And we're going to go on to Ron for Spokane, another Washington caller. We must be big in Washington today. How you doing today, Ron?
How are you?
Fantastic.
I had a question, sir, on the S&P.
Mm-hmm.
What do you see for a short-term target?
To the downside?
Yes, sir.
1475 is where the first level of support comes back in. Are you watching on Tiger TV?
I am, sir.
Okay. You've got the high on September 14th. You've got the high on October 5th. You've got the high on October 18th. And then when you come in, you actually see the first break on, the 17th of January, when this thing actually starts moving up and above that 1470, 75 range. So you're going to have a good consolidation range in that move. And see if, what do I have here, 6 months. Go back here a little bit longer out here. And, you got to 1422 on April 2nd of last year.
Right.
But let's just go back. I'm going to say you've got a nice high out here in that September 4th, September 14th high. That's probably what everybody wants to get tested. It's 1474.51 with 5 billion shares. Again, we did 4.7 on the downside yesterday, and right now we are doing, let me bring it back up here because it was just piddling along. We got 2.45 billion shares. So I think maybe 3.2, 3.3, maybe 3.4 for the end of the day on the consolidated New York Stock Exchange tape. And that's going to be a very light bounce on a very heavy move down. This is kind of no man's land is closed between 1508 and higher to 1518. A close below 1508 gives you a little more confirmation in the trade today. I can see it selling off into the weekend.
Yeah,
so, we've got
that's what I'm looking at. But short term, on the 60-minute chart, it looks like it's oversold, so it looks like a potential bounce could come.
I think this is about it with this volume. If normally, if you continue to see selling in the broad amount of stocks, not just in the S&P 500, and if I look at the summation index, it is decidedly headed down. It's headed down for a number of days now. And as long as the majority of stocks are going down, eventually the market will crack.
Okay.
And unfortunately, there aren't really good historical historical summation charts.
Right.
They pretty much are lying around for a year, and that's it. I tell you what I'll do if I can remember it. The ones from April of 2010. I think it's April. The high, there was like a big high that got sold off on April, April, May, and it started about the 28th of April that year, and by May 5th, the market had gotten destroyed. And if you look at it, this market's setting up exactly that same way, and basically the summation indexes are rolling over almost exactly the same way. So I'm pretty confident we're going to see, I'd say there's 80% chance we're going to see 1475 just on a normal pullback, much less any real volume coming back into this market.
One last question, please.
Okay.
When you're looking at a technical aspect to determining a trade, do you trade simply off the daily, or do you look more towards, like right now, the daily's telling me that, the potential for downturn is there, but the 60 minutes telling me that this could hold and actually might even go up to about 1518. So when in doubt, what would be your deciding factor as to when to look at maybe taking a trade? I see your 1508 was your swing.
Yeah.
But I guess as a technical aspect question, would you try to stick strictly with the daily chart and the weekly?
I do, and there is a technical reason for it. I spent a lot of time testing charts anywhere from 5 minutes to 60-minute charts over 5 years in the S&P. And this gets technical, but if you remember the signal-to-noise, everybody was always talking about signal-to-noise ratios and stereo equipment. You basically find out that what I look at and what I show on the show every day is what's commonly known as a zigzag chart. The highest peak to the highest peak, and I use my power law vector indicator to look at the energy behind it. There's a couple of reasons why. One, let's say that it's a weekly chart and the high came on Monday or the high came on Friday. Are you including that volume in the move and the weekly? It can get rather fuzzy. And especially if you have, the high comes on Monday and then the next top of that weekly. Maybe the high comes on Friday, or maybe it comes on Monday. So especially on shorter term weeklies, they can get skewed. I'm only really concerned with the energy from the absolute bottom to the absolute top.
So you look at the longer swings in respect to the ups and the downs based upon the weekly and the daily patterns.
Right, but I'm not really, I'm looking at dailies, but I'm just looking at from the absolute low to the absolute high, and then I look underneath that. If I didn't have a power law vector indicator, I just look down below it and say, okay, what are those volume bars telling me as the majority case? What is the weight of the evidence, the preponderance of in my charts, they're all up days are blue and down days are red, right?
Right.
So you see, the first move, you got a forest of blue from the 1158 low of November 21st, 2011.
Right.
And when you actually look at that, pretty blue, then you get a lot of red on the pullback. And if you spend enough time, you really look at it. I'm not worried about one single day. But to get back to the actual answer, if you look at a chart of 5 minutes, and you want to compare it to this noise ratios that everybody hears,
right.
The busiest street corner in New York is the equivalent noise level of a 5-minute chart. And you get down to a library, and that's like a daily chart. So you go from, I think it's 78 dB would be the equivalent of noise if you just plugged it in an amplifier and started reading it. When you get down to and that's like on a 5-minute chart. When you get down to like 1 hour charts, you're down to like 48 dB. When you get down to daily charts, you're about 32 dB. Mm-hmm. And when you look at zigzag charts, you're down to about 25 dB of signal to noise. So
you trade less often, but you catch the bigger moves.
That's what I'm looking for. But I also want to look at the long-term trends, because they're always going to swamp the short-term trends. And you just want to look for the biggest wave you can find, the next one coming into shore, just like a surfer. You're looking for those.
I start with everything from a 5, 15, 30, 60, daily, weekly, monthly.
I do it just the opposite. I look at the longest one I can get, then I start homing in on the shortest ones, and seeing if there's some kind of longer term trend that is backing up my short. And then, of course, if you listen to the show a lot, I'm sitting every day looking at how many of these stocks just broke previous highs or lows, and whether that was on higher or lower volume. And
I have been doing that, Mike. In fact, I've been listening to you and Steve consistently here for the last couple of weeks, incorporating that volume concept. So it's definitely proving its validity, I can tell you that.
So, it's just kind of a strange market, because we are seeing a lot of these stocks break previous highs on higher volume and instantly closing back below the previous highs. And that's, you normally get one more test, or sometimes you'll get a retest of those highs. But sometimes that's just the blow off top, and that's it. Okay. So, to me, as long as the summation index continues to move down, I'm going to sit on my hands on this one, because it's rolling over. And in fact, that I'm pretty sure, where is it at here? Yeah, April, May. Is this it? No, we come back. Can you hang on for just a minute?
I would love to.
Okay. We'll be back in just a minute. I want to talk about those April 2010 high and the rollover in it, because it's fairly decent to look at at this time, because it reminds me a whole lot of this market.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we're back. We're talking with Ron in Spokane. Just kind of how this market reminds me of, I thought it was April, May of 2010, when this thing just fell apart in a matter of days. There was kind of a little double high that came out of here, and I'm going to zoom in for you here. Oop, hang on a second. But I'm going to go back and find the charts because I've got them in my newsletter from back then. I'll try to dig them up over the weekend and show them on Monday. But we had his top back in here, and from about the 1st of April all the way to May, the summation index continually was rolling over and strongly all the way back up to the top. And then we had, what, a 150-point move down in a matter of just a handful of days. And this is kind of what happens when you get up to the top and it's clawing up there. But the bulk of the stocks are being sold. Why all the money continues to flood in, the last stocks in the Dow and normally and then the S&P. And everybody has whatever money they have left, they shove it into the biggest indexes and the biggest stocks, and those tend to hold the market up, at least the index part, why most of the other stocks are rolling over already. And if you look about April 15th in there in most stocks, you're going to see that almost all of them started rolling over the 15th of April. And I had some stocks that were short in there. And then actually, I think I ticked it. But I'll go back through and find it, and we'll bring it up on Monday's show. But it's.
Do you think this is a bull market for the next year or two, or are you somewhat suspicious of that thinking?
No, I think it's just a market that has a huge amounts of leverage, like every other bubble.
Okay.
I mean, the without the Fed throwing money out of 747s because the helicopters aren't big enough,
right?
Where would this market actually be? And since
we'd be down.
Yeah, but I mean, it would probably be somewhat realistic. With them out here trying to generate business where there ain't none, I don't know what reality is. And eventually, at one point, which I think is now, they've gotten to the point where I think they've admitted that they just can't throw any more money at this market and actually move it up. The downsides are bigger than actually trying to throw any more money at it.
Well, they're exhausting the efficacy of their program. Yes. Right.
So they can spend $1 billion, but they're only going to get 100,000 of it to do anything now, and they'll be out $1 billion. So they're just throwing good money after bad, and they're just trying to figure out how they can wean us off of our morphine drip of money and cash. And I just don't know how low is low. Unfortunately, fixing a bubble by creating a bubble, this sounds to me like a horrible, horrible idea.
Well, it's never proven itself.
Yes. Certainly they are trying something different. But, in fact, I wrote about it in my newsletter today in both the Tech Insider and the Path of Least Resistance. And that was, there's a great book, and it's called, I wrote about it this morning, John Kenneth Galbraith, A Short History of Financial Euphoria. And it's only like 120 pages. But it goes
light read.
Yeah, very light read. But it goes through all the bubbles back to about 1600. And every one of them has the exact same thing. And the number one cause of bubbles blowing up and destroying countries is leverage. And we got just mountains and mountains and mountains of leverage. So every single one through 1600 through now is all about how much leverage there was. And the more leverage there was, the bigger the bomb that went off when it was over.
Yeah, I read the book Endgame.
Yeah, I haven't heard that one.
Terrific reading. In fact, I was thinking about writing a book over the weekend and giving my first copy to Bernanke. It's called I'm Okay, You're Not Okay, but hey, that's okay.
Well, we're done. I want to thank you for the call. We'll be back on Monday. I'll write a note to myself to try to pick up that move. I'm thinking it was May of 2010. Well, maybe it was 2011. Anyway, I'll pull it out. I'll show it on Monday, and we'll go back and Back to the Future.